Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the S&P 500 followed by the Nasdaq100 and the DowJones30 futures chart. Let's get started with today's video. Of course, today is the first trading session of the week, and it's a very important trading week because we get a lot of data, and unlike most other weeks, this week really is important as a lot of the data that we are expected to get later on this week is something that the Fed pays very close attention to. The last couple of months, it's primarily been jobs numbers and inflation reports, and this week it's all about jobs. So we get the JOLTS numbers tomorrow, then of course on Wednesday we get the ADP numbers, and then on Friday, the final trading session of the week, we get the all-important non-farm payrolls figure. So very important this week, and I think it will have some very large impacts as to where the market trades next, depending on what that jobs data is. But just looking at the S&P 500, it doesn't look great here. We've had something that isn't foreign, and that is a 5% correction in the month of August. Month till date, we're currently down 3.83%. We are off the lows by approximately 2%. So, we've had a nice recovery over the past week and a half, but still, the technical setup here doesn't look great. We're clearly in this downtrend. We've had several attempts at trying to break out, but ultimately we do end up returning back into this downtrend, and that's evident during today's trading session where we did briefly break out. We've tested the 200-day EMA, but it seems to look like we've been rejected. And I wouldn't be surprised if we did go and at least test a 50-day EMA, which sits down at 4,408. But of course, this is a very focused in time frame, being the 2-hour one. But if we just quickly withdraw from that time frame and look at more of the longer term picture, the daily chart, we're currently trading on this trend line. And again, I wouldn't be surprised if we did go and push down for one final low. One thing I want to highlight is the dollar. The dollar has broken out of its downtrend. I think it at least goes up towards the 105 area. So we could potentially see a further 1% incline here in the US dollar, and of course that would be a negative for equities. And then of course for 10-year yields, I don't think that these have officially rolled over yet. I think that we could potentially see one final high before we do see some major backing off, and of course that's both of those catalysts are going to be negative for US equities. So that's another reason as to why I believe the markets haven't yet bottomed, despite the recent surge higher off those lows that we formed back on the 18th of August. Now I just want to quickly highlight something with you all. These are the cycles. This is the 80-day cycle here for the S&P 500. I pay very close attention. It has been very correct in predicting peaks and troughs in the past when I've used this cycle, and at this moment in time we are still very far from when we are expected to bottom here for the S&P 500. This is the 80-day cycle. And then if we look at a more longer term picture, a shorter term picture, as you can see, this is kind of like a more zoomed in cycle. And, again, we are just at the cusp of, peaking here. And it correctly predicted a peak, which of course was the end of July here for the S&P 500. And it's expected on both of these cycles, which have been very correct as of recent, that we will peak in the bottom. So we should bottom just after the beginning of September. So this is like, the first week of September is when a expected bottom may occur here for the S&P 500, as well as the Nasdaq and the Dow Jones 30. So this leads me to think that, perhaps we still have further to go towards the downside until an official bottom is in place. So I just don't really feel too confident going ahead and buying stocks here or buying the indices. Yes, they have come off a bit, but I think that you could potentially get another, 1.5–2% towards the downside if we were, to roll over as the cycles are currently expecting. And then just quickly going over to the Nasdaq 100, we've attempted to rally today. We did go as high as 15,088, but we're now trading back below 15,000. And again, I wouldn't be surprised if we were to break back down within this downtrend. If we take out the low from last Friday, which sits at around 14,700, that then would, turn this market quite bearish. And I think that you'd then be expected to go and test the lows that we formed back on the 18th, which are down at 14,550. Nothing technically here is screaming buy. Also, I'm a very close follower of the mark indicators, and the exhaustion towards the downside just isn't there yet, which again leads me to believe that the markets still have further to decline. Then quickly going to the Dow Jones 30, the Dow currently trades at 34,500. We've kind of met an area of resistance here, being the 50-day EMA. I wouldn't be surprised again if we broke down lower and perhaps gone and tested the 200-day EMA, which sits around 33,779. So, I think to conclude this video, I think that we do have further to go towards the downside. Yes, the markets are trading in positive territory today, which is a good sign, but I really wouldn't be surprised if, come a close, we are trading in the red, or if not, as we work our way through the rest of the week, especially considering that we are expected to get some very important data this week, I really wouldn't be surprised if we did go and retest the lows of the past couple of weeks and move lower, because my cycles are telling me that we haven't yet bottomed. The mark indicators are also telling me that we have further declines to come, and the mark is incredibly accurate at predicting bottoms and tops. So, these are indicators that I do pay very close attention to, and they're kind of telling me to, continue to be patient here, as we still may have another 1 to 2 weeks pain. Guys, if you'd like to follow my day trading signal group, as well as receive my daily market research, then make sure you scan this QR code on your screen. It will take you to my website. It's completely free of charge to join. You get your first month free of charge, and despite the fact that the market still may have a further 1 to 2 weeks of declines, I still have a few individual stocks on my radar, which I do believe have some great upside over the next couple of days. And in fact, I've just sent a signal out for one of those stocks, so make sure you join my signal team. It's completely free of charge, as I mentioned, and it takes 10 seconds to sign up.